Friends, in this lecture, we would be spending some time on the two core concepts in environmental economics, namely the marginal cost and marginal benefits. These are associated with our discussion with the negative externalities and positive externalities. While discussing positive externalities, we said that a public transport system could be considered as an example of positive externality because in this case, the private benefit is much less than the social benefit. However, when it comes to economics, we need to talk about cash, we need to talk about the investment. So, if there is a government and the government has to decide on the number of buses the government should procure, because public transport means the buses are purchased by the government. So, this decision has to be based on what is known as the marginal social benefits and the marginal social costs, right? Similarly, uh, we talked about a negative externality in the as a plastic bags being circulated in the economy. The social cost of plastic bag is greater than the private cost, and this we had discussed because the plastic bags has negative externality, pollution externality, but simply by knowing that the social costs are greater than the private costs would do no good, because ultimately the government intervention has to come, and the government intervention has to come in the form of decision as to what exactly has to be the price of the plastic bag to be levied. So for that, we need to consider not the total private costs or the total social costs, but the decision has to be taken on the basis of what is known as the marginal cost. So what is marginal cost? So marginal cost is basically additional cost, a cost of producing an additional unit. So how do you calculate that? So suppose you know that there is some X is the total production cost, and if you want to produce some Y goods, so X upon Y is the cost per unit. So if you want to now produce an additional unit which is X plus 1, then it might take some cost which is, let's say, Y dash. So then that Y dash, which is the cost of producing that X plus 1th good, is known as the marginal cost, right? So the marginal private cost is the change in total production cost that comes from making or producing one additional unit. So to calculate the marginal cost, we need to divide the change in production cost by the change in quantity. Now you know that the private cost to the producer would depend on both the fixed cost as well as the variable cost, and the fixed cost will not change with respect to production levels. It would remain the same, but the variable cost would change with respect to the output level, right? So this is the basic understanding of the fixed cost and variable cost. However, when you talk about marginal social cost, private cost is understood that it is basically the cost which is borne by the producer, just for taking into account his fixed cost and the variable cost. Now, when you talk about the social cost, we said that it is the additional cost imposed on the society from the production or even from the consumption of one good. So, a marginal, when we say social cost, how do you differentiate it between a social cost and a marginal social cost? So, when we use the term marginal social cost, we refer to the additional cost imposed on the society from the production of one more unit. Okay, one more unit is very important, right? So a marginal addition to the production or marginal addition to the consumption, what would be the cost of that? That is the marginal social cost. So it would include, now when you talk about a marginal social cost, it would include both the private cost as well as the cost of the negative externalities, right? So in order to explain how this marginal social cost is calculated, let us consider a factory which is producing some good, some widget, okay? And this factory would emit pollution because of a production process, right? Some smoke would be emitted and so on and so forth. So when you produce that good, right? There is a fixed cost because the factory has to be, there some land has to be purchased, the infrastructure has to be put, so that is a fixed cost to the factory. And there is a running cost to the factory or variable cost to the factory because you would require to pay the labor for the labor done, you would require to pay for the materials, and you would require to pay for the electricity or energy. So that is a variable cost. So that together would give us the private cost of the factory, right? So the private cost of the factory, if you want to calculate the marginal cost for it, so an additional of one more unit, if you want to calculate a marginal private cost, then if the factory decides to produce one more good, then what would be the change in the cost to the factory? That would be the marginal private cost, right? However, we know that this production process would also generate pollution, and which would impose the cost to the surrounding. So it is not enough for us to simply talk about the private cost. It has to be both the private cost as well as the negative externality cost, which could be in the terms of health issues, property damage, environmental degradation, and so on and so forth, right? So if I want to calculate that, so the external cost would be the cost which would include, maybe we need to calculate what is the cost of healthcare for individuals affected by pollution related illness. We need to internalize the cost of cleaning up environmental damage. We need to put some value to the loss of biodiversity. So let us say that this cost of producing an additional widget comes to be $5, right? And private cost is the cost which I said involves the fixed cost and the variable cost. So if you want to produce one more unit, one more widget from this factory, let us say that that additional cost for producing one more widget is $10, right? So the marginal private cost then becomes $10, and the marginal external cost becomes $5. So the marginal social cost would be 10 plus 5, that is $15. So this is how the marginal social cost is arrived at, as the summation of marginal private cost and the marginal external cost. Let us take another example of car pollution, where we talk about the marginal social cost, because that would include both the private cost borne by the car manufacturer in terms of producing that car, and the external cost which is be imposed on the society through negative externalities like pollution, congestion, accidents, wear and tear of the infrastructure, and so on and so forth, right? So this together would be the total cost. But when you talk about now the marginal cost, we need to quantify it for a additional one car. If the factory decides to produce an additional one car, suppose the factory was producing 100 car, and now if it decides to produce an additional car, that is 101 car, then what would be the cost to the factory? That would be the marginal private cost. And if the 100 cars were causing some pollution, if 101 car is being produced, it would again cause some more pollution, and that it would have some cost to it. So that would be the marginal external cost, and the addition of the two would be the marginal social cost. Now, how do you arrive at this cost? So we need to do some research, look at some empirical data, use some modeling techniques, and quantify this cost. Okay. So that becomes the core thing of environmental economics. How do you quantify? How do you put a value to the externalities? That becomes the core exercise in environmental economics, right? Now, once you quantify this marginal social cost, we also need to quantify what is known as the private benefits or demand, right? So the private benefit or demand would be why basically, though we are saying that car is producing negative externality, why not put an outright ban to the cars? Because the car might be serving some purpose to the society, right? To the individual, though not to society. So that individual is benefiting from that car, so that is becomes his private benefit. Okay. So the marginal private benefit or the marginal social benefit would be in terms of, let us say, when the individual is purchasing a car, that might help in improved mobility. It might help to his access to the economic opportunities, his convenience, and so on, which are in a way a positive externality associated with car usage, Maybe it is restricted to an individual, but then it is still up some benefit which is accruing because of that. So these are marginal private benefits or demand forces, right? So we call it as MPB, or we might also call it as some marginal social benefit because of that use of car, right? Now, how do you take a decision? So the optimum point of taking a decision is we look at the marginal private benefit and the marginal social cost, and wherever these two intersect, right, that becomes your optimum point. So the curve which shows here is the optimal car production curve, where you see that marginal private cost and the marginal private benefit, they intersect, right? So when the marginal private cost intersects with the marginal private benefit, that gives us a equilibrium output. That gives us the equilibrium output. But if you consider the societal good, then we need to not talk about the intersection of MPC, that is the marginal private cost, with the marginal private benefit. We need to talk about the marginal social cost intersecting with the marginal private benefit. So you see the point B, which has been the new point, which has been arrived at by considering the external marginal cost because of negative externalities. So that point B is our actual optimum. So the optimal car production has to be at point B, and that point B is when the MSC, that is the marginal social cost, would equal to the marginal private benefit or marginal social benefit. Okay, so this is how in actual economics optimum is discovered, right? So we are still using the market principles of demand and supply, but the supply is now taking care of is taking even taking the cost of pollution, the negative externality cost into consideration, and we have a new curve which is a MSC curve, new supply curve, MSC curve, which is the marginal social cost curve, and that new social marginal social cost curve intersects with the marginal private benefit curve, which is the demand curve. So the supply and demand curve, they intersect at point B, which is the new optimum. Okay, so this is very interesting concept in environmental economics. If we are able to figure out how to estimate the marginal social cost, then that helps in formulating the policies of taking care of negative externalities. Thank you.